Hey there guys, it's Brian here, and today I'm going to be sharing with you in this video what time frame to use when you are trading. So I know a lot of people get confused and they ask me, which time frame should they use, right? Because there's so many different time frame on the chart. There's 5 second, 1 second, there's even a tick chart, like second by second is always moving, right? And then there's a minute chart, 1 minute, 3 minutes, 5 minutes, and then 15 minutes. Hourly, different hours, and then daily, weekly, monthly, so many different time frames. So which to use? I know it can be a bit confusing, but in this video I'm gonna tell you exactly how to use the right time frame, right? But before I begin, I would really appreciate it if you can subscribe to my channel, like my videos, right? It really motivates me to continue creating content, and lets me know that you guys whether you guys like it. If like it, hit the thumbs up. If not, then hit the thumbs down, right? At least leave me a comment like why you don't like it, how can I improve, right? So let's go into the video. So what time frame should you use? I think that's gonna depend on a lot of different factors. Firstly would be what kind of trading style are you implementing, because there's so many different type of traders out there, different type of trading style. We have from your very short time frame, right? You have like high frequency trading, but likely that for that you won't be even looking at the charts at all, because everything will be automated by bots and algorithm, and in that case it doesn't really matter, because everything will be pre-programmed, right? And that's like each trade can take place in like milliseconds. That's crazy. So that's like the extreme end, right? Next you have like your tick chart. Tick chart would be like second by second. So not every platform will have this, but if your platform has it, then it's something that you can use. So for tick chart, it's likely going to be for very quick in and out, almost I'll say like scalping, right? You want to enter in very quickly and then enter out very quickly. So you want to see the most minute and granular information that is on the chart, and that would likely be the tick chart, right? So it moves every second, it just keeps moving. And so for those, I'll say if you are trying to do something like market making, if you want to do it manually, right, it's something that you can do. If you want to do scalping, right, maybe you got some of your scalping strategies, right, you want to monitor the price very closely, that's something you can do. Next would be maybe like a minute chart, 1 minute. I would say that is also very fast, because a lot can happen in 1 minute, right? So for those, I'll say for day traders, for scalpers as well, right? And sometimes you don't have to stick to just one single time frame alone. You can use a few different ones, right? You can check. I recommend checking time frame 1 above and 1 below, right? So for example, let's say you're using the 1 minute, 1 above could be like a 3 minute, or maybe even 2 above like 5 minutes, and 1 below in that case would be a tick time frame already. So why the time frame, why 1 minute, right? It's because it's quick enough for you to get a lot of information and can act pretty quickly on it. But my advice would be generally to use the longer time frame if you are not familiar with it, because there's a lot of noise in the lower time frame, and you can be kind of like FOMO or FUD, right? Fear of missing out, or FUD is a fear, uncertainty, and doubt, right? Into making all the trades, right? Because it can suddenly shoot up by a lot, and on the 1 minute chart, it seems like it is a lot, but actually, when you look at the bigger picture, like an hourly or maybe even daily, right? That a huge spike in the 1 minute chart is actually nothing, right? It just seems like it's a very big deal because it's on the 1 minute time frame, right? So it's something to take note, right? Which is to avoid using the shorter time frame if you are just starting out, or if you are not so familiar, right? But if you know what you're doing, then that's good. And the next one would be like 3 minute or the 5 minute. So for this is, I'll say still in the same category, right? For the scalpers, day traders, and for 5 minute, maybe for swing traders as well. If you are looking for like very precise entries for your to enter the trade, so you may be looking at the higher time frame, right, to see the overall trend, and then when you want to pick your entry, right, like maybe you want to see when there's a retracement or pullback and you want more detail on it, you can go down into the shorter time frame, like 3 minutes, 5 minutes, maybe even 15 minutes. Yeah, so that's for the, you know, that range. Next one, I'll say like 15 minutes, so you're starting to get a little bit more onto the bigger picture, but still not that big. 15 minutes, I'll say, is pretty good to use with along with 1 hour and 4 hour, right? So if I were to check on if my main time frame is the hourly 1 hour, to check the bigger trend, I would go on the 4 hour chart to see the overall bigger picture, so I can see more details, right? I can see further to the left, there's more history compared to the shorter time frame, right? So on 4 hour, there's more data going on. You can see more trends, bigger picture, right? And then from there, I'll go on to my main time frame, which is 1 hour. And then let's say if I decide I want to go long, then I'll switch onto the 15-minute time frame to really nail in on it and then see what's going on in there, right? And yeah, that's for like 15 minutes and kind of like 1 hour. So 1 hour, 1 hour you go into more of swing trading, position trading, and maybe even for long term, right? So say if you are swing trading, you may look at 1 hour, 4 hour, and even daily now, right? To determine it, and then to determine like the overall picture for daily, and then you use your hourly time frame to determine your entry, right? So it's always about +1, -1, about there, the time frame. So for 4 hour, kind of the same thing. You use that's 4 hour is pretty long already. I would say, you know, for swing trade, yes. Day trading, not so much anymore, right? Day trading, I think at most you probably look at like the hourly 4 hour, and at most maybe like 1 day. But day trading, you want to just open in and out within the day itself, so likely you're going to be looking more on the minute chart and the hourly chart. So for 4 hour and the daily, I'll say a longer time frame, right? For swing trading, position trading, right? Something to take note is that all this time frame is going to depend on which market you are trading as well, because for say like cryptocurrencies, the market is open 24/7, so the market is going to move a whole lot faster than the other markets, right? So for those, you might want to focus on shorter time frame, right, rather than the usual time frame that I recommend. So for example, say like if you're trading stocks or futures, you know, the 4 hour in there, you know, may be very different from 4 hour in crypto market, because crypto moves a whole lot faster. So you want to experiment with that, right? Because if the normal market, you have like you know, like it opens at, you know, depending on which market, maybe 8 or 9 a.m. and then it closes for lunch for an hour, and then, you know, after lunch like 1 p.m. and then it opens for trading until, I don't know, in the evening, then it closes, right? And then the next day it repeats. So because of that, things can move a little slower in the normal traditional market. Yep. But for markets that open, they are open for longer and for more days, things move faster. So that's something you got to take note and experiment with, right? So for the longer time frame, I'll say like daily time frame is one of my favorite time frame. If you are planning to do swing trade or just like hold your trade positions for anywhere from a couple of days to weeks and maybe even months. Yeah, months. Daily would be a good time frame to look at. And the thing that I like about daily time frame is that it removes away a lot of the noise that happen in the minute and the hourly time frame, right? Sometimes if you look at the hourly time frame, you can see like, you might seem like, oh, the chart is the price is breaking out, right? Should you get in? Maybe you should get in, maybe not. You know, it's a little bit hard to tell. So what can happen in the hourly time frame is it really breaks out, but just before the day closes, right? Maybe few hours later it goes back down, and then it didn't really make a real breakout, right? It can be like a false breakout. And then what you see on the daily time frame, you could still see a red candle with a really long wick at the top, right? Because it on the hourly time frame it goes up, but then by the time it closes on the daily time frame, it closes lower. That's why there's a red bar there, and then you see this long wick, right? And that's not a good sign if you want to go long. So that's the advantage of using the daily time frame, daily candle, right? Because you can see more in detail, and you can filter out some of the fake out and all the noise, right? It's just cleaner, and also it's less stressful in the way that it's because there's less noise. What it means is it's likely also going to be less volatile, right? And what I mean by that is, say if you look at a minute or hourly chart, you can see prices start to move all over the place, right? You have like long wicks here and there, and then it goes up and then suddenly it goes down. So if you're not experienced, right, and it can be pretty hard to read what's really going on. And then when it comes to choosing where to put your stop losses, if you're not very experienced, right, then the hourly or the minute time frame can be a little bit deceiving because it's harder to tell. But the daily time frame is generally more solid, right? So it's a lot easier to see what's going on in the daily time frame. So if you're just starting out, then I'll recommend daily time frame because as you go lower into the time frame, things get faster, it becomes more volatile, there's more noise. That means also more room for error. And generally I recommend just once you're familiar with like the longer time frame, you know how to read the market, right? You got a little bit more confidence, then I say go lower into the lower time frame. And I know a lot of you guys are watching like all the day trading videos. It looks really good, right? In a day, within like an hour or two, you make like a lot of profits, and that seems that's is really very possible. But those people are experienced, right? You see those guys with professional day traders with lots of charts, many screens, right? They are likely they can react very fast. They have got like really good like muscle memory. Some of them maybe even got like the macros on their keyboard, so they can execute very, very quick. But if you're just starting out, right, what happens if you are gonna trade on the lower time frame is that maybe you are not as experienced, so you might need some time to think through your trade. And then what happens in this scenario, if you trade on like very short time frame, is that by the time you decide that you wanna enter the position, the price will have moved by a lot already, and the prime optimal point to enter would have been over, and you've missed out that trade, right? So on the longer time frame, like maybe 4 hour or daily or even longer, it's a lot more forgiving. Yep. So that's why daily is one of my favorite, and I also recommend for you to start there, right? And for next would be like the weekly and the monthly. Those is, I'll say, pretty rarely used because on those time frame you can really see like even many years back, right, like decades. So if you want to look at the overall picture of the instrument, right, ever since it was created, right, or for example like some stocks ever since it got listed, right, after IPO, you want to see everything in existence throughout all the years, then I'll say use the weekly and the monthly because you get to see everything there. And then that's like really the very long trend, super big picture, right? But for buy and hold for like your retirement, right, if you think you're gonna buy into the next Coca-Cola or those big stocks, but nowadays I'll say the money lies in crypto, right, because that's like the new tech stocks, right? Like in the olden days, you've got your Apple, Microsoft, Amazon, right, and they are now all very big, established. I think in the future, some of the cryptocurrencies that we have, they are gonna be at that point, they're gonna be like the next Apple, next Microsoft as well. So yeah, only if you want to hold for like a really long time, then weekly and monthly, right? Or if you just want to see the overall picture, then you can use that as well. So I hope you guys have found this useful, right? Which time frame to use. Hopefully it will help you use the right time frame, and don't be afraid to experiment with it, right? Because the best time frame is the one that works for you, right? These are just a recommendation, right? And a guideline works for most people, works for me. But if you find something that works well for you, then you know, it might give you a advantage over other traders, right? If you decide to use a less common time frame, like maybe 2 hour, 3 hour, you know, they exist, but most people, they either use 1 hour or 4 hour, at least for me anyway. Yeah, so I hope you guys like the video, and so leave a thumbs up, like my video, subscribe to my channel, and check out the resources that I have. I've got a free workshop. I've got a Discord trading group. Join my Discord trading group if you're a trader, right, or you want to connect with other traders, right? I've also got a mentorship program. If you wanna have a one-on-one mentorship training with me, I do provide that as well. Just click the link to find out more. So thank you for watching, and see you guys again.